What's going on, everybody? Charles Boone here with Prosper Trading and the co-host of the new Dips to Rips podcast. Folks, make sure you tune in. But today we're going to bring you 3 stocks that should be on your radar, both in the near term and long term. We're going to review these very quick. We're going to break it down on the charts, give you a glimpse of what we're seeing, where maybe some actionable opportunities may lie, and really what the upside potential will be for these names. All right, so first off, I want to talk about Mara. Mara is an interesting name, right? Because, it's not just tied to the stock market itself, but it's really tied to the crypto market overall, right? Mara, Marathon Digital Holdings, for those that don't know, they're a Bitcoin mining company. And, at one point, they really did catch quite a bit. They started rallying, from the $10, $20 range and started blowing up to the $80 range. And now we've seen a dip from 83 all the way back to $5 because obviously Bitcoin and crypto itself, the crypto market has moved lower, but so has this market overall. And if we don't believe that the stock market is going to be bouncing back, well, then you probably shouldn't be watching this video in the first place. But if we do believe that the markets are going to come back, generally speaking, crypto is going to kind of run along with it. And one of the names that we want to point out is Mara. Why? Because of the great value. Now, certainly Bitcoin could start rallying really strongly outside of the markets. That's just going to only help propel Mara to the upside overall. But sympathetically, we're usually going to see these markets move together. At least that's what we've seen over the last year. And I expect that kind of trend to continue here. Now, when I break down Mara, currently it's at around $13.06. It's actually holding up relatively well under these market conditions. The initial support and demand range I'm going to be looking at is right around this $11 range. That's where we really held ground and started to reverse up. But ultimately, that may not be the absolute levels. The absolute levels, in my opinion, is between 5 and 7. That's where we kind of saw Mara start to hold and really start to balance instead of just leaking straight down, and really held these critical old levels that we date back here for almost 2 years where it bounced off of. So that tells me that the market was watching that price level and that there was a lot of demand. Now, in the near term, again, we could see a lot of weakness. But if we kind of compare where it is right now, $13 downside of 5 and then $13 upside of 80, well, you can see that this is in a great value range, right? We're closer to the lows versus the highs. And a lot of people say, well, that doesn't sound great. Well, as an investor, that's a great opportunity. As a trader, this means that we're also facing a scenario with lower risk, higher reward. And those should be attractive as a buyer, even in a bearish market. Now, the first level I'm going to watch here in the near term is going to be highlighted by this 50 simple moving average. That's by this orange line right here as well. They've held that price level along with the 100 SMA, and that's really where that critical pricing is going to be in, that $12 to $11 sweet spot. If we hold that price level, we could see a quick reversal. You could probably put a stop just under 10 and look for that shoot back. If it gets back to this upper range here, where I'm highlighting with this second upper arrow here, that's right around this 15 quarter, 15 half range. We need to bust through that level. In essence, the market showcased that it filled that little baby gap right now and also has taken profits in the near term. But if we actually hold and bounce, what the market is also showing is that we're making higher highs and higher lows. Now that is attributed to an uptrend, not a downtrend. The long-term picture has been in a very strong downtrend, but in that small portion of the bigger picture, if we zoom out, it's certainly in a downtrend, but that small portion in that bigger picture, we're actually starting to see a potential reversal of trend. So it's going to be very critical in the near term that we see Mara hold this level. And if we do, I anticipate a bounce back to this 15 level. But ultimately, I think that they're going to run up and test within this range, somewhere around this 18.5 to around $20. And I believe that if it could capture above 20, that's when the quote-unquote skies open up. We could see massive upside potential all the way to the 32s. And as a buyer, folks, if we are looking to find value, it tells me that if I'm going to risk $8 or so to the downside, I need to make at least 4 times that to the upside. So that means now we got to sit here and say, what could we make to the upside? In the worst case scenario, we could see it break out to 32. In the best case scenario, we could see it balance to the upper portion of its longer term range, somewhere between 50 and 80. Now, I only see that, coming into play if A, the markets are within, maybe 5% of their all-time highs, most notably the NASDAQ, and B, that crypto captures and gets back above that 40 to 42,000 threshold. Crypto meaning Bitcoin. And that's going to be critical here. Now, if we look back to the longer term picture, what kind of timeline will that take? Well, that's somewhere like 6 to potentially 18 months down the road. Depending on Fed action, of course, that's going to be highly dependent, in terms of what our forward path for the stock market is going to be. But in the near term, if we could weigh this entry somewhere around 13 to 12 and we find that support, that means we're going to have a stop out range of around 950, right? So that puts us at around, say, $3 of risk, give or take. Well, what is our upside from that point? Well, if we break out to 20, that's going to put us at 2 to 1. But if we break out to 30, that's going to put us at an extremely, extremely advantaged position. That's around 7, maybe even 9 to 1, depending on where our entry is and where our upside potential is. So, for me, if I start seeing the proverbial trend start to transition, which we started seeing here, and this market doesn't utterly collapse, I think Mara is going to be a great upside play here in the near term. Now, stock number 2 is a small company named PayPal. Now, PayPal is a really interesting name as well. The fintech sector got completely obliterated during that market sell-off. Names like UPST, Affirm, Block Inc., and then, of course, PayPal got totally crushed. In fact, PayPal's reversal started back in last July. So basically 5 months before the market started rolling over, PayPal was already struggling with valuations. But now PayPal has gotten into a very favorable valuation, and most notably, it's been drawing a lot of institutional interest. Names like Elliott Management has actually gone in aggressively and bought in, and so far since then, PayPal's actually held up well during the market downturn, and more importantly, has shown strength in definitive weakness. And that tells me that there's a big build out in demand in this name. Now, what I mean by that, folks, is that this market has come crushing down over the last month here, right? We peaked out in mid-August, and I'll pull up the Qs really quick. We peaked out here in mid-August, and the Qs have dropped from 334 down to 290 recently. But during that time, PayPal, surprisingly enough, has actually only dropped from 103 down to 89. Now, it is a lot, but it's not, in terms of brevity, like a lot of other stocks have come tumbling down off the highs. More importantly, folks, what's really caught my eye here is that on that swing low, we ended up filling that lower gap that PayPal jumped off of from their earnings report. So it tells me that the short sellers were only looking to target down to that gap fill, and PayPal has been responsive since. Now, the question is, will PayPal continue to hold that pricing level? I could easily see it happen. Considering now that the 50 SMA has crossed up above that 100 simple moving average and now is also rapidly approaching that 90 level, that 90 level is going to be very significant. We have that swing low in play here where I just highlighted with the circle, plus that 50-day moving average. That's going to give buyers a lot of reason, right, to try and see if support's going to be in play. And if support's in play, buyers are going to rush into this stock. I'm not going to be the only one that recognizes that PayPal is holding up well in this market environment. Even today, they're only down $1.80, while the market, the NASDAQ in particular, is down over 4% at this moment. That's pretty significant, right? Names like Amazon, Google, Meta, Apple, they're getting washed. Microsoft is down over 10 points today. Yet PayPal is holding strong. And in fact, if you actually look at their trading range right now, I'll pull it up in the hourly chart here. If we look at the overall aspects of their trading range, they're actually floating in the mid to upper portion, where other stocks are trading on the lows. Let's take a look at Apple, for example. Apple is in a hard spill down. Microsoft is in a straight line down. Meta is in a huge sell-off, yet PayPal is holding strong. So this tells me a story, folks. If you're unsure of that story, let's kind of put two and two together. This market sell-off is extremely significant. The weighting on stocks right now is very heavy. Heavy as in it's causing the stock prices to move down significantly today. Yet here's PayPal holding up, remarkably well and staying above a key price level, that $90. So let's watch that $90 threshold going forward. I think the breakouts through 103, and again, once we get that big push beyond that 20 SMA at 114, I also absolutely love the idea of a targetable level to the upside. That's going to be at 117.65. That's that gap fill here from the closing price of April 5th of this year. Now, if we push beyond that level, certainly there could be a little bit of resistance coming into play right around this 122 price range, 123 price range. And, we got to kind of temper our expectations in the near term, because obviously the market's been in a longer term downtrend since the start of this year. But quite honestly, PayPal is one of those stocks that was beaten up quite significantly and now is showing a lot of strength. Now, when we look at that and we consider that and we say, what name should I be attracted to in this market environment? Why not look at a stock that, even though they're down, they're holding up better? Would you rather be down $10, $8, $9, or would you rather be down $1.50? 2 plus 2 here in this scenario. Plus, when you show strength and significant weakness, what do you think is going to happen when the market rallies back or starts to trend higher? PayPal may be one of those leaders. While I'm not an investment advisor, I certainly found PayPal attractive, especially when it got to that 67 range. And certainly clients of mine were asking a ton of questions about that stock. While, again, I can't really give financial advice in that fashion, I certainly said that I'm attracted and that I personally will be looking at this very, very closely. Since then, PayPal hasn't rolled over. That should tell you something. If big money, these hedge fund billionaires, are throwing billions of dollars into the stock at that level, that should say something. Folks, listen to the market. The market is telling you something key here. If it holds back at that 90 level on any test and it starts to bounce, that's a very simple buy low, sell high theory in the near term. Where should we sell at? Well, $100 is going to be one key marker here. That's where we just rejected in the near term. I'm looking for that breakout through this 103 range right now. And then if it breaks out through that 103 range, I'm targeting somewhere between 103, potentially at the 114, 115 range, where the 200-day simple moving average, but most notably around that 117.45. That will be a great upside target. Now, should you buy leaps in this situation? Guys, I can't predict the future. Who knows what's going to happen in 2023? We don't know Fed actions then. We don't know how our economy is going to be. Is it going to be turning into the quote-unquote R word that everybody's throwing around, especially the media? Or is this economy going to bounce back? That's the question we kind of have to face. In the near term, 90 is the price to watch. The bounce back to $100, the breakout through 103, that's how I'm going to be playing this name, regardless of market conditions. All right, so stock number 3 is quite a doozy. It's actually widely known by momentum traders, but maybe not known for all retail traders. More importantly, they're going to be an important fixture in our life going forward, especially as our daily lives are getting more and more tied to technology. And that name is CrowdStrike. It's a cybersecurity company. And, this is a stock that's gone up a tremendous amount over the last 3 years. Of course, this year, growth has been punished, right? 2 of the names that I just talked about are growth names as well. This is a name that's been severely punished, but it's starting to come back to life. Now, I'm just going to pull up CrowdStrike here really quick so we could take a quick view. And I want to point out 2 things. Number one, if you believe in the cloud sector, well, you have to believe in the cybersecurity sector. They go hand in hand. That's why sympathetically, when one sector goes down, the other follows suit. When one sector goes up, the other follows suit. The case in point here, and the question is going to be, how far or where should I start targeting CrowdStrike? Well, in recent sessions, we've bounced from 130 at the peak low all the way back to 203. That tells you how responsive, but more importantly, that tells you how active this stock can move. It is a high flyer. This is not for the faint of heart. However, if you like volatility and more importantly, you like upside, this is a name you're going to want to keep on your radar. Now, if we look at the weekly chart over the last 3 years, you could see that this was a stock that was hanging around this $40, $60 range, and in 2 years it traded nearly at $300. Now we've gone from $300 or $298 back to $130. Heck of a retracement. Now, let me pull it back to the daily chart. And just like I had showed you with PayPal, when the markets rolled, obviously a lot of stocks came down with it. However, CrowdStrike overall has held up exceptionally well. This is a stock that's kind of teetering around and balancing around this 200-day moving average. Now, this is different than the other two examples. Quite honestly, the other two examples are still far below that 200 simple moving average. However, CrowdStrike is trying to battle back and has actually been trading above the 200-day moving average over this last month. Now, this is very key here. The question is, where is our floor? The floor has been defined by the market to be at this price in the near term, or this price range in the near term. And that's around 165 to 169. That's a great value play in my opinion. Now, obviously, if it breaks below that pricing level, we're going to look at 150, and then I would strongly encourage you to look at that lower tier, somewhere between 130 and 140. Some may even say it's overvalued at that range. I highly doubt it. This is not a small up-and-coming company. This is a name that is very, very prominent in the cloud industry and the cybersecurity industry. Very simple, very key and in line with names like Zscaler and Palo Alto. And really, I like them probably better than Cloudflare, but Cloudflare also offers up great value. For me, I am watching a key technical level on the downside here. There's a small baby gap fill here. The closing price is at 179. That's going to tie in directly with the 100 SMA range right here. So the question is, are we going to find technical support at that pricing level? Well, the last time we saw it approach the 100-day moving average, it bounced. And it tried to hold in this range as well. It actually ended up gapping down below that price, which is what led to that leak. But that leak led to a demand zone. The demand zone, and I'll actually edit this to make this look a little bit more clear, but that demand zone, folks, ended up coming back down, in my opinion, to a key level of interest. The June 30th low, the July 14th low, the July 26th low, all was centered at this old price range. And sure enough, every single time crowd was in this range, it responsively jumped off of this price level. So rinse, wash, repeat, right? Now, what is going against CrowdStrike? Well, number one, the markets and the overall market trend. Number two, it's certainly off of these highs hitting lower lows. So there is a tale of caution here that we have to be careful of. But if we do see that response at this 178 to like 180 price level and we bounce, that's very bullish. Again, the markets came down and brought the stock price to fill the gap and then reversed. If you folks don't know what that means, when stocks fill the gap and then reverse, it tells me two things. If it's to the downside, sellers at that point are looking to take profits, and at the same time, buyers are coming in to catch that reversal. So you can see that the dynamic of the market sentiment shifts fairly quickly. Maybe not instantaneously, but we're talking about within minutes, possibly an hour, not multiple days. We're talking about a fairly instant reversal. And that's really where the market sentiment comes in. The short sellers had a defined target. The buyers were looking for that reversal. And when the stars align, boom, we see that reversal take place. Case in point, PayPal went to 90 and bounced back to that near $100 price range. So that's kind of what I'm anticipating in the near term. Now the question is, can we break beyond this $196 to $200 range? I feel that if we push past $200, we're not going to stop at this swing high here at 206. This really brings me back to this 230 and potentially a pump to 240. The question of the matter is this market going to rebound? That's what's going to help, provide that sufficient booster to bring the stock back up. Now, certainly when the markets are bullish, these names are on a tear. They can make straight line runs like no other. $10 ranges, $12 ranges certainly could happen in this name. Now, again, this isn't for, those that are not, able to digest risk. It's hard to trade CrowdStrike with just a dollar stop unless it's like a pure day trade. Quite honestly, you're going to have to allocate some risk. CRWD moves around $8 a day. Now, for those that do love volatility, you certainly want stocks that can move a lot on a daily basis. And again, when we start trending, these names start to trend as well. So imagine you're able to capture it at a defined level, like the one that we're talking about, right around that 180 price. And then next thing you know, 2 days later, it's trading at 190 or 195. Would that make you happy? And if so, this is the type of stock that you're going to want to look at. Now, in this scenario, folks, if we're able to actually trade it off that 180, I would actually encourage you to define your risk just a little bit lower, right around that 176 price. If it gets below 176, it's most likely to work its way to 168. And again, if you like the stock and it starts holding that 168, hey, listen, there's no need to let it come all the way back down and then try to catch a reversal. Why? Because if this market does get ugly, it won't stop at 168. And again, with that volatility, it could get down to 150, 140, and next thing you know, you're holding quite a heavy bag. I always encourage traders, listen, we can't be right all the time. If the quicker that we recognize that we're wrong, we could correct our mistakes, let go of the bag, and then if we really like the company, it is a quality company. If we really like the stock, it is a quality stock, look to buy in lower, okay? Now, some people have to deal with the wash rule. I totally understand that. There's nothing you can do in that scenario, folks, quite honestly. It's just a IRS rule. There's nothing you can do. However, if you're not subjected to that wash rule, cut bait. Listen, I know it hurts to lose, but the question here is, would you rather lose $200 or $2,000? If you're faced with that scenario, well, you're only trolling if you pick that 2,000 lever, right? You're always going to want to lose less. Take that attitude. Lose $200 on one side, make $2,000 on the other side, net profit $1,800. You're a 50% trader, one win, one loss. How's that scenario sound? That's the approach that I like my traders to take. That's the approach that I present myself as a coach in the market every single day. The quicker that we can learn to cut losses quicker or faster, the better that we're going to be in the long run. Especially if we end up holding this bag, tying our money up for 3-4 months, guys and gals. Imagine all the opportunities that money could have gone into, you missed out on. And instead, the stock's got to make a huge rally just for you to be break even. Now, again, all of that is broken down because of the volatile nature of this name. I just want to make sure everybody is in tune. All right, guys, so if these 3 stocks interest you like they interest me, keep these on your radar. Let's keep an eye on those levels that I provided and see what comes from it. Guys, if you want this information, do me a favor, like, comment, and subscribe down on this video below. Check us out at prospertrading.com. And don't forget, check me out with my co-host, the great Howard Greenberg, on our podcast, Dips to Rips, on this channel as well. Like I said, like, comment, and subscribe. If there's anything else you want me to talk about, let me know. Ladies and gentlemen, peace and love. Trade well, everybody.